Ladies and gentlemen, my name is Greg Michalowski. Today's day is December 2nd, 2014. I'm going to do 5 currencies in 6 minutes. I'm actually going to do 6, so with gold included, so I better get going. Let's start with the euro versus US dollar. What do we know about this currency pair? Well, for the last month, we've been in this box right here. This box has a low of around 123.57 and a high of about 123.77. And within that box, there's another box, and that other box goes from about the 125.08 level down to the 123.93 to 97. It's this box right here. And in yesterday's trade, we came up to the top side of that red box right here around the 125.08 level, also near this trend line right here. And we found sellers in today's trade. We found sellers below the 100 and 200 hour moving average. We found sellers below this trend line right here. We found sellers below this trend line right here. And now we're breaking to new lows here outside of this red box right here. And that is more bearish here for the euro versus US dollar, but we still have a hurdle to go. That is down at the 123.57 to 60 area. That's where our lows for the year come in, not 1, but 2 lows right here. And we have to break below that level in order to push lower for this currency pair. Where's resistance now? We probably don't want to see the price today move above the 124.11 area. If I were to put a real tough line in the sand, I would say this line right here. We don't want to see the price move back above this line right here. If it moves back above that line, something's up. We would be back above this low. We'd be back above the line. We'd be back above this trend line, which had a number of different points, and it shouldn't do that. So that's what I'm looking for, is that just as long as we stay below this area right here, everything's okay to the downside for the euro versus US dollar. Let's take a look at the sterling versus US dollar, and this too is trading near the low levels for the day, or just made the new lows. We're bouncing off of this yellow area right here. This yellow area has a number of different lows in place against that level, and so I'm not surprised we're seeing support buyers against that level. Comes in at 156.18 to 156.28. In addition to that, we also have this triple bottom right here. We had a low here, we had a lower low here by about 3 or 4 pips, and we had a lower low yesterday about 3 or 4 pips below this low right here. So we keep on making new lows by just a little bit, and that is not good to see, because we get these rebounds back to the upside. In yesterday's trade, we saw a big huge move to the upside off of that, but now back weakness. We're back below the trend line, back below the 100 and 200. Look for support buyers here though, but look for resistance against the 156.76 level in trading here today. Once we move below that level here, as you can see, we didn't trade back above it. So that's our new line in the sand. Also corresponds with this low right here. Let's take a look at the dollar versus yen. The dollar versus yen was on a move to the downside. We had the downgrade by Moody's here, which forced the market to the upside here. Yen weakness. And what did it do? The market sold into the ISM data here, where the market stopped on the support line right here, or the broken trend line here. We broke above that trend line here, found support against it, and again found support here. The better ISM data yesterday forced the market to the upside. And then in the if you take a look at the 5-minute chart here, we started to find support in the 5-minute chart against a 100-bar moving average right here and here, and that helped propel the market to the upside. So where do we stand now? New highs here for the dollar versus yen. These are the highest levels going back to 2008 here. So we're kind of in nowhere's land here for the dollar versus yen. This is a weekly chart right here, looking at the high prices going back to 2008. Back to our hourly chart right here. What we probably don't want to see in trading going forward for the bulls to remain in control is a move back below the 118.96 level. That corresponds with this high price going back to November 20th. And if we move below that level, then there may be some disappointment in this break to new highs. We're not exactly seeing a lot of momentum to the upside right here. So, we're kind of at that point where the market might be a little bit nervous. So we got to pay attention to this 96 level, 118.96 level on the downside. The Aussie versus US dollar is the next currency pair. We had a Reserve Bank of Australia interest rate decision, and they talked down the value of the currency. Governor Stevens said the Aussie dollar needs to go lower, and that helped push the market back to the downside after coming up testing this low going back to November 7th. This low became this high right here, and this high right here. So we have a floor here, or a low here, and we're creating a ceiling here. We also had this trend line right here in the 38.2% retracement. So that was a nice level for the market to stall at, but really it was that what came out in the statement and subsequently that forced the market to the downside and back below the 100-hour moving average. We did come down to a nice little support area here. Look at this, 1, 2, 3, 4 different points there, and that level, keep that level in mind. If we continue to move lower, what worked yesterday may work today or going forward. So we're going to watch this lower side trend line in the Aussie versus US dollar. Now let's take a look at the New Zealand versus US dollar, and this pair, unlike the Aussie versus US dollar, but like it in today, we're down on the day, but we do have support coming against the trend line here, and we found support buyers against the 77.80 level. What I'm going to be doing for this currency pair is watching the 50% retracement level. I know we've been below it here, we've been below it here, we've been below it here now, and we fell below it here. Each of the time the market goes below, we correct back higher, and if we can stay below 50% retracement, I think that bias remains to the downside. We had a nice little test here of the trend line yesterday, and the market held that level, so we'll see if the bears can stay in control. Finally, I want to take a look at gold. Gold rallied sharply to the upside in trading yesterday, came up to near trend line resistance, actually moved a little bit above that level, but in today's trading, market found resistance here against a 38.2% retracement at the 12.13.31 level and move lower. Where do we go? Let's take a look at the hourly chart. Right to the 200-hour moving average, right to the 100-hour moving average, right to the 38.2% retracement and move to the upside. So good support right here. As long as we stay above this level, it's bullish for gold. There you go. 6 currencies in 6 minutes. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.